Hi, and welcome to the Sanford Advisors Software and Internet Monthly Report for November 2023. As usual, we are going to review the previous month's M&A and venture capital activity across the entire software landscape. So let's dive in on the M&A front. In November, we saw $92 billion invested across 80 transactions at a median revenue multiple of 5.7 times. The majority of the dollars invested for the month came from transactions that were announced earlier in the year and completed in November, including Broadcom's acquisition of VMware for $69 billion and Nasdaq's acquisition of Adenza for $10.5 billion. The completion of these major transactions is a positive indicator for the software market as a whole. There are also a handful of large, newly announced transactions, notably Francisco Partners' acquisition of New Relic for $6.5 billion. Moving on to annual deal volume and dollars invested, the month of November led to a significant jump in annualized deal volume for dollars invested, and 2023 is now on pace to be down only 9.4% year over year, and well above 2021. With that said, the VMware acquisition this month and the Activision Blizzard acquisition profiled last month account for $144 billion of the transaction volume, roughly 50% of the year-to-date total. The number of software transactions annualized for the year tells a very different story, as 2023 is on pace to have the lowest total transaction volume since 2014. The market data remains consistent with our view of a bifurcated market. High-quality software companies are selling at attractive multiples, while less attractive companies are struggling to find a transaction. Looking at software multiples over time, the valuation spread continues to be quite narrow due to lower volume through the second month of Q4. Median revenue multiples increase slightly as we are seeing competition for quality assets drive up median multiples in line with late 2021 and early 2022 valuations. However, these valuations are often not attainable for the broader market. The trend of a low SaaS premium dating back to 2022 continues through November 2023. The primary driver of the tightening of SaaS versus non-SaaS multiples is interest rate hikes, as the SaaS business model tends to result in early unprofitability and cash burn. As a result, we do not expect the SaaS premium to materially rebound until late 2024. As already mentioned, despite November being the largest month for dollars invested, the number of transactions fell well below the LTM monthly average. 2023 as a whole has seen sharp volatility in transactions as economic uncertainty persists. The venture capital side of the market did not see as much relative activity in November. We saw $3.2 billion invested across 393 transactions for a median deal size of $4 million. The largest and most noteworthy financing in November was Databricks' $685 million raise led by T. Rowe Price. The Series 1 funding valued the data analytics and AI company at $43 billion. Monthly deal volume fell month over month and remains in line with the 12-month average, which is quite muted relative to prior periods. Additionally, yearly deal volume and dollars invested tell a similar story of a slow software venture capital market relative to 2021 and 2022. Deal volume is tracking to be down about 21%, while dollars invested is down almost 30%. Finally, looking at VC valuations year to date, valuations across all stages have declined year over year, but remain in line or higher when compared to pre-pandemic levels. Mid-stage VC valuations have been impacted far more than other stages, while early-stage valuations are actually higher than they were in 2021. Well, that's a wrap for this month's Software and Internet Report. As always, thank you for listening, and we'll see you next month.